Hey there, my name's Curtis Lucas and you're watching Empire Building. So I've been away for a little while and I had all kinds of videos planned. I was going to be talking about all the FUD surrounding the India ban and also cover Mara's recent quarterly results. But today, Morgan Stanley ripped the roof off of Bitcoin. Right in the middle of the trading day, CNBC published an article with exclusive information that Morgan Stanley was going to become the first of the US big banks to allow clients with assets under management direct exposure to Bitcoin. But first, Empire Building is pleased to be able to offer viewers of this channel sign-up bonuses for opening a brand new account with Webull. Just click the link in the description below and start the process to open your account with Webull, and you'll receive 2 free stocks. One valued at up to $250 for opening your account, and the second valued at up to $1,600 after you fund your account with $100 or more. You'll also enjoy commission-free trading, pre- and post-market hours trading, and free contract fee and zero-cost options trading. In addition, when applicants transfer from other brokerages to Webull, applicants will be able to get a transfer reimbursement of up to $100. And with that, let's get back to the video. Morgan Stanley is the first big US bank to offer its wealth management clients access to Bitcoin funds, CNBC has learned exclusively. The investment bank, a giant in wealth management with $4 trillion in client assets, told its financial advisors Wednesday in an internal memo that it is launching access to 3 funds that enable ownership of Bitcoin, according to people with direct knowledge of the matter. The move, a significant step for the acceptance of Bitcoin as an asset class, was made by Morgan Stanley after clients demanded exposure to the cryptocurrency, said the people, who declined to be identified, sharing details about the bank's internal communications. Bitcoin's rally in the past year has put Wall Street firms under pressure to consider getting involved in the nascent asset class. So this is a big deal because this is the bank caving to pressure, literally people banging on their door, trying to get them to provide them exposure to Bitcoin. And now that Morgan Stanley has done this, all the other big banks that have client assets under management no doubt have their phones ringing off the hook, demanding that they as well provide such services. Otherwise, they're going to be taking their money away from those banks and move over to Morgan Stanley. And again, obviously, these are high net worth individuals. They're not offering it to all their clients, but they get into that next. But at least for now, the bank is only allowing its wealthier clients access to the volatile asset. The bank considers it suitable for people with an aggressive risk tolerance who have at least $2 million in assets held by the firm. Investment firms need at least $5 million at the bank to qualify for the new stakes. In either case, the accounts have to be at least 6 months old. And even for those accredited US investors with brokerage accounts and enough assets to qualify, Morgan Stanley is limiting Bitcoin investments to as much as 2.5% of their total net worth. But before we discount that as sounding like a small number, remember, $4 trillion in assets under management. So even if only 10% of the customers actually opt for this, and of that 10% actually allot 2.5% of their portfolio, that still amounts to approximately $10 billion of additional money flowing into Bitcoin. And this is only from one of the major banks. The thing you have to realize is that adoption curves don't follow a linear progression. It starts off with a little bit at the beginning, followed by a tsunami. We are not at the tsunami stage yet. People with upwards of $2 to $10 million of assets are not usually the last ones to the party. And you may be asking yourselves, well, if they really wanted Bitcoin, why wouldn't they just go buy it themselves? Of course they could, but again, you're already looking at people who, like these are wealth management funds, meaning these are wealthy people with a lot of money that don't want to be in charge of that money. Hence why they give it to a company like Morgan Stanley to manage it for them. So if they're already not willing to do that with something as simple as stocks, then they're certainly not going to be prepared to do that with something as involved as Bitcoin. They don't want to have to learn all about private keys and public keys and cold storage, hardware wallets. This is all too complicated if they already are not prepared to do that with something as simple as stocks. But what they do know is they see that number going up and they want in on that. So while yes, the video I was going to be doing was to talk about what's going on with India and the incredible poor timing of this article published by Reuters on Sunday, literally the day after Bitcoin reached a new all-time high, that India was thinking about placing a criminal ban on Bitcoin and all cryptocurrencies, which they described as private cryptocurrencies, which last time I checked, Bitcoin wasn't private anything. It's not private, they're decentralized. But that's neither here nor there. Bans such as that will have little to no impact on Bitcoin's long-term trajectory. While it is exciting to see the impact that news events such as these can have on the price of Bitcoin, it certainly keeps the space lively and entertaining. But it can also make things wildly uncertain for people who are just entering and just don't have that confidence. Even someone like myself, I've got contracts that I've been holding on to since January, expiring this week. And being this close to the expiration date and the direction that the price has been going in since the weekend, I found myself wondering, maybe I should just cut the line here and get out. And literally the moment I was thinking that was this morning, as the price of Mara dropped down to $35, I believe it was, which would have turned out to be the exact bottom of the market. So generally speaking, I've always found the moment you feel like selling is probably also the moment you should be buying. That is, if you actually have anything to buy with. So I can appreciate, I understand where that fear comes from. I feel it too. But I've learned you really got to go against that. If the fear of dropping further is your motivation to sell, the odds are higher than not that that is exactly the moment you would have been buying. I've always said if you are going to trade these things, you should be selling into strength, not weakness. There's still no guarantee that it's going to work out for you, that the price won't just in turn go higher, but at least you won't be selling at the bottom of a market. But seeing as how I didn't get to cover the video on India, there is one little bit of information I really did want to share with people so that they can understand exactly what to expect. Because I'm telling you, India is not the first, and it's certainly not even the first time they've done this, but it also won't be the last. Andreas Antonopoulos had some very insightful comments on this exact topic over the years. So this is just an example of that.
The bottom line is that in countries where the rule of law matters, money is a form of speech. Freedom of association, freedom of expression, freedom of speech protects political expression through currency. In the United States, we put that into a United States Supreme Court decision on the Citizens United that said you can't regulate campaign contributions because money is speech. So in countries where the rule of law matters, you pick that fight head on with Bitcoin, and we're going to take it all the way to the Supreme Court. Do you know how many lawyers per day Mark Andreessen can hire? And the problem is that they may lose. And losing on a decision that says Bitcoin is protected speech is much worse than the status quo, which is kind of gray. So that's not going to happen. And in countries where the rule of Putin is the rule of law, ban Bitcoin, they say, and nobody gives a damn. Bitcoin is evil. Really? You say it's evil. I better look into this. Because every time you say something is evil, it's because it's good for me and bad for you, and I don't like you. This is happening in Venezuela right now. You're like, Bitcoin is the currency of terrorists, pedophiles, extremists, and criminals. Don't pay attention to our 550% inflation rate. And please leave your money in the currency of choice and go with us to the bottom as hostages of our insane policies. And what are some, obviously technically literate, a very tiny percentage of the population in Venezuela probably now thinking, really, I should look into this.
So right there's some things to consider. And keep that in mind the next time you hear this kind of FUD getting pushed around out there. The reality is Bitcoin is not going to be welcomed by all nations. And its level of acceptance will vary depending on where you live in the world. But just in case anyone might not be convinced that these persons with knowledge on the matter were actually legitimate, now that this news has been made public, it has been confirmed by one of the firms that's directly involved with Morgan Stanley in this deal. And that's NYDIGS, or NYDIGS, who we're actually quite familiar with because Michael Saylor did an interview with one of the founders of NYDIGS during MicroStrategy World. And I've covered this in a video not that long ago, highlighting some of the best parts of that interview. And if you haven't seen it, it'll be popping up right here at the top of the video. Go ahead and check that out. It was very worthwhile, and I highly recommend even checking out the entire interview. There's a lot of good stuff in there. And frankly, if you had seen that video, this announcement wouldn't be all that surprising to you. So with any luck, we'll be on our way again. Obviously, as we can see, anything can happen at any time. So I still think your best bet, if you have money to invest further in Bitcoin or Bitcoin mining or anything involved in this space, your best bet is to, as always, cost average. Take it slow. I mean, think about it like this. Even if you had invested at the very top of the last Bitcoin bull market, a long-term cost averaging strategy would have rewarded you with massive gains by now. But trying to time these kinds of movements or reacting to these kinds of events will most likely lead you to, at best, underperforming the general market, or at worst, actually losing money while the price is going up. So take it easy out there. I'm going to try and get to a lot more videos that I've got planned. I do find that the videos on the channel do a whole lot better while the price of Bitcoin is rising, which I also find to be a pretty significant indicator as to when things are getting maybe a little bit frothy. So I'm going to try and keep an eye on that. And from time to time, I'll even share it with you so you can see what I see. That's all for this one. Now let's get back to empire building.